good morning, good evening, good afternoon, students and traders all around the world. This is FXFreedom. Hello Shola, how are you? This is FXFreedom broadcasting you live on YouTube, and this is Forex Trading Course 101, everybody. Remember, this is the foundation, okay? This is not the advanced, this is the foundation. And also remember that trading is a learnable skill when we learn in the correct way the three pillars. What are the three pillars? Pillar number one is the market. Pillar number two is the strategy. Hello, Mattia, how are you? And the big one, the trader. Hello, the queen. Talking about the trader more in the Forex course 202, everybody. So those are the three pillars that are going to lead you to your graduation, right? Happy Monday, everybody. You are going to graduate from this course when, number one, you have your chart set up and ready for trading, and we are doing this with these modules, whoops, here on the left. Number two, you have a strategy. You are going to have a strategy in place, and you are going to understand why you win and why you lose. And number three, you have a complete understanding on how this market works, and so you can analyze the market and make an educated prediction for the week, long or short. Moving forward, what do champion beginner traders always say? Champion beginner traders always say that I'm not going to live and die on a trade-by-trade basis, and this is a quote from Mark Douglas. Remember, 90% of traders lose money in the Forex market worldwide. And risk disclaimer, these streams are not trading or investment advice. These streams are for educational purposes only. And if your way is not working, why don't you try ours, everybody? And for homeworks and questions, you have my Gmail contact, my Skype contact, and you can follow me on TradingView. Now, after this beautiful sermon, today we have the rules for trading the original Fibonacci. What are we going to need today, everybody, is of course, are the charts, but today also you are going to need, where is it? Let me see, not this one, and not this one, everybody. We're going to need an Excel, not this one too. We're going to need this one. Okay, everybody, so today we are going to need something like this. You can build it by yourself. It's a calculation how to calculate the volume or the so-called lots. Okay, hello Virginia, how are you? Happy Monday. Okay, you can build it by yourself. It's just a formula, nothing special really, or you can send it an email to me. I'm going to send it to you. Okay, so let's open, everybody, AUD-CHF daily chart. Okay, and how to trade, we're going to delete this one, it's not relevant right now. How to trade, so the rules for trading the original Fibonacci. Okay, now step by step, this is the original Fibonacci. Okay, so rules, we're going to call this simple trading strategy. Okay, and number one, we are going to enter at CTB, stands for counter trendline break. Number two, past support. Number three, CF stands for candlestick formations. Number four, stop loss goes below in an up Fibonacci, below the capital A. Okay, number five, risk reward ratio minimum 1 against 2. Okay, everybody? So this is a simple trading strategy, and those are the rules. Today is going to be a little bit of math. Okay? Now, this is our Fibonacci, and then the market is going to do some things, make sense? It's going to up and down or sideways, whatever might be the case. Something like this. Transparency, there you go. Okay? Now, we've learned about we're going to enter at the counter trend line break, right? So this is a no-brainer. We learned that the market is going to break our counter trend line, so this is going to be our entry in here, and this entry most likely is going to be at some level of past support, something like this. We're going to check this on the left on the chart. Candlestick formation in here. We learned about the importance of candlestick formations. Okay, candlestick formation in here, and stop loss goes below the A. So if this is our entry, then then this is our stop loss level. Just an example. Foreground, background, background, background. Okay, this is our stop loss, and clone, we need to go for 1 against 2, right? Clone 1, 2. Okay, now this is theory. Hello Dancy, how are you? Okay, we are going to enter at the counter trend line break, past support, candlestick formation, stop loss goes below the A, risk reward ratio minimum 1 against 2. Okay, now this is the easy stuff. Okay, now this is an upgrade right now. Rule: you are trading the Fibonacci pattern. Okay, number 1, you are trading the Fibonacci pattern. Number 2, put your total risk below the A. Put your total risk in percentage below the A. Okay, everybody? What does this mean? So we are using Fibonacci's to determine trend direction, but today we are talking about something different. Make sense? We are using Fibonacci to determine trend direction, but today we are talking about the rules for trading the original Fibonacci. So we are not talking about the Fibonacci just as a tool for trend direction. We are trading about the pattern. Okay? Put your total risk in percentage below the A. What does this mean? Example. Let's say that my risk on this Fibonacci pattern is 1%. Make sense? Freedom, I don't get it. Give me a second. Counter trend line break. So you have this Fibonacci pattern. Let's put this up in here somewhere. Okay, there you go, something like this. This is your pattern. Okay, and it doesn't really matter. Listen to me very carefully, because this is where some of you are still losing money. It doesn't really matter. I need to risk 1% on the pattern. Okay? Yes, right? What does this mean? Here is the question, everybody. If this is the market and I do something like this, right? And I can, and this is my 1%. 1%, right? And the market is in here right now at this very moment. The market is in here. We're going to color code this in green and make it something like this. Everybody, can I enter in here? Can I enter this trade in here? Risking 1%? What's the answer? Yes or no? Yes or no, everybody? Can I enter right now? You have all of this, right? You have the counter trend line break in here, and so we are following those rules. You have the counter trend line break in here, past support, and you have the counter trend line break in here, right? And you pass support, and you have the candlestick formations. Now stop loss goes below the A down in here. Risk reward ratio must be 1 against 2, right? And now we are telling you, yes, this is an upgrade. This lesson today, it's an upgrade of the previous lessons. Put the total risk here, okay? And we are telling you, whatever you do in here, up and down, up and down, up and down, you should, if the market stops you out, you should lose 1%. Now 1% is just an example. Professional money managers are going in with 0.5%, but 1% is just to have the calculation. Make sense, everybody? Dancy says no, need risk reward no good. Mattia says no, we have no 1 for 2. Queen says you can risk 1% there, but risk reward doesn't work at price. Exactly. So Julius, the answer is no. Okay? You cannot enter, because if you are going to... I got it, right? If you are going to here with 1%, and this is your entry, this is the stop loss, this is the take profit, then you are going to risk more than you are going to make. Make sense, everybody? So what are we going to do? And this is a rule, and stay until the end. I'm going to tell you about, we're going to talk about business today. Okay, so what are we going to do, everybody? We are going to split the 1% on the entire pattern. Make sense? So number 3, when risk reward doesn't fit, we split our entire risk on the pattern. You are going to love this lesson today. I promise you, you are going to love this. But still, I have a good news and a bad news, right? Yes, red goes to red. Okay, everybody? So, if I am... But let's go step by step, right? If not, it's going to be too confusing. So, I cannot do this in here, right? This is the green, and like in here. So here I can't, right? What if the market is in consolidation and the market is down in here right now. Can I do this then? So now I'm in here. So here I cannot enter with 1% risk, no sir, because risk reward ratio doesn't fit. Okay, what about now? Can I do this right now down here in the blue level, red level? What is the answer, yes or no? There is no right, I mean this time there is right or wrong, but try to type in the chat, everybody, don't be shy. Up in here, this would be a mistake. What about down in here? Can I enter right now and say, okay, I'm going to risk 1% in here, and red goes to red, right? 1, 2, 1, 2, 3 and something, right? 3.2. Yes, 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 exactly. Yes, 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 right? Now this is a no-brainer, right? So this is okay. Now hear me out right now, listen to me. Those kind of trades are going to happen, but not always. Many times. Hello Jivan, maybe Petal. I'm sorry everybody if I don't pronounce your name correctly. Okay, many times we are not down in here. Hello Clara, how are you? Many times we are up in here. So what we're going to do up in here, everybody, we are going to split the entire risk on the pattern. Can you send me your email, please? My email is down in here, educationfxfreedom@gmail.com. Okay. So what we're going to do, everybody, we are going to spread 1% on the pattern. And this is one, at least me, this is one of the best news, if you ask me, or the best lessons, because once you understand how to trade the Fibonacci's and other patterns too, then you listen to me what I'm going to say right now. You then want the market to go against you. Yoo-hoo, right? When you understand how to trade the Fibonacci's and when you understand how risk works, then you want the market to go against you, because the more the market is going to go against you, the more money you are going to make. Yes, we're going to check the charges. Let me finish. Calm down. Okay, so we are going to spread this risk on the pattern. What does this mean? You have 1%, and remember, 1% is just an example. You have 1% to risk inside in here. Okay, so you have two ways of spreading the risk. Okay, two ways. So way number one, 16. So way number one is, one more time, way number one is mathematical. Brazilian guy talking English, it's mathematical. Okay, way number one is mathematical, and correct my English, everybody. If it's not correct, please correct me. And way number two is Fibonacci levels, is Fibo levels. Okay, let's talk about math number one. So if everybody, if 1% represents, yeah, it's 1%, okay, but you're going to understand, everybody, not a problem, right? So if 1% of risk, 1% of risk represents 100% in money, okay, and we split in 5, and we split the 1% into 5 parts, okay, how much equals the part? A little bit of math today, but not too many, not too much, right? So this is the mathematical. Yes, they are building something in here. We have a construction truck, everybody. Sorry about the noise. Yes, this is the simplistic approach. Makes sense, everybody? If 1% of risk equals 100% of my money, okay, in money terms of risk. If 1% of risk equals to 100% in money terms of risk, it's still 1%, but it's money, and we split the 1% into 5 parts, how much equals the part? So if you are entering the market up in here, okay, up in here you have the counter trend break, the candlestick formation past support, and you know that you cannot enter in here with 1% because risk reward ratio does not work. So how much can you risk if you split in 5 parts? So this is the first part, 1 and clone, 2 the second part and clone, this is the third part and clone, this is the fourth part and one more, clone, this is the fifth part, and we are going to readjust, right? So this is the Fibonacci, stop loss below the A somewhere, right? A little bit like this, not exactly to the pip, 0.2, exactly, everybody. So you are going to enter in here, and instead of you risking 1% on the pattern, you are going to risk 0.2. Okay, this is the, I'm not sure my English is correct, this is the mathematical approach. Okay, you divide 1, right? You go 1 divided 5 equals to 0.2, and 0.2 equals 20% in money terms. It's not that you are risking, maybe my English not the best, right? I'm not saying that you're going to risk 100% of your capital, no sir, but 1% represents in money terms the risk. So if 1% represents $100, if 1% represents 100 euros or yen or Brazilian real, whatever, then 0.2 is going to represent 20%. So if you enter in here, stop loss goes, where? Exactly below the A. Somebody's typing, oh, I got it. Somebody's typing, oh, but I'm not going to make much money. The traders who are thinking, oh, I'm not going to make much money, You don't understand this game, everybody. Make sense? For the lack of a better word, you don't get this profession yet. You need to manage the risk, not follow the money. Take a pen and paper, everybody, and write this down 5,000 times. My job as a professional trader is to manage the risk, not to chase the money. Print it out, put it on your laptop, computer, put it on your husband or spouse, put it on your car, put it on your fridge, put it on your TV, and read this sentence 5,000 times. The job of a professional trader, it's not to chase the money. Oh, but if I enter here with 20 bucks, then I'm going to make just risk. Those are the rules. Compound effect, not really. You are near, but not really. Calm down, calm down. Calm down. Now the thing is going to get interesting. Calm down. Calm down, everybody. So you enter in here, and if the market stops you out, how much are you going to lose? What's the answer? So example, right? To make it more easy to understand. So example, 100% of my risk per trade equals in money terms $100, right? Or euro or whatever. Okay? Edit label. Just an example. So if you enter up in here, everybody, right? And the market stops you out. Yes, this, let's not complicate, everybody. You have different money management, risk management formulas online. This is the simplistic approach. Okay? Not 1%. If you enter in here with 0.2 and the market stops you out, everybody. Okay. Any questions so far? Everybody type in the chat, yes, I understand, or type in the chat, no, I don't understand. Do you understand, everybody, that what we are doing right now, we are looking at the Fibonacci as a pattern, and we are going to split the 1% into 5 parts. 1, 2, 3, 4, 5. Okay? So you are going to enter in here buying the Fibonacci pattern, but you are not going to risk $100 if the market stops you out. You are going to risk 0.2 because 1 divided 5, 1% divided 5 equals to 0.2. One more time. 1 divided 5 equals 0.2. Can you understand this, everybody? Okay. Don't worry, we are going to look at the chart and we are going to do a real life example. Okay. Now, listen to me very carefully and watch this lesson 2,000 times. When you enter the market and if the market goes against you and is down in here, is this a good news or is this a bad news for you? Queen understood, Clara understood, Julius, yes. Freedom, can you repeat please? Yes, sir. You entered up in here, risking 0.2, right? Which is $20, not 100 from like before. and the market went against you. So first entry and you are losing and the market is in here. Is this good news for you or is this bad news for you? Somebody's typing, this guy is crazy. No, I'm not crazy. This is one of the best lessons talking about risk management and the skill. It's emotional. It's emotional. This guy must be crazy. No, I'm not. Let's talk, everybody. Talk to me. You entered in here and the market is going against you on the pattern. Is this good news or is this bad news? Should you be happy or should you be sad? Of course I should be sad, right? I'm losing money. Well, are you still are you still in a trade, yes or no? Yes, in the end, everybody calm down. We're going to talk about mentorship in the end. We're going to talk about money in a few seconds. Is this good news or is this bad news? Matthias says you can buy again with another 0.2. Yes, you can. But is this good or bad for me, everybody? I want to hear from you. What do you think? And then I'm going to explain the logic behind. Yes, we are still in a trade. Everybody, you are still in a trade. Are you winning on the first one or are you losing on the first one? And believe me, I'm going to trick you today a lot. Should you be happy? Like, wow, you know, great, the market is going against me. I'm so happy right now. Or should it be, oh my God, again, the market is going against me. And oh my God, I need to work hard and I need to buy another, you know, another 2 lots or whatever, you know. How should you understand this market, everybody? This is the lesson today. Happy Monday. Happy Monday. This is the lesson today. If you can understand and learn this lesson, you are going to be less frustrated and make more money. Julius losing. Okay, so number 1, the first position is losing. Question number 2, is this good for our pattern or is this bad for our pattern? This is another type of question right now. I'm losing on the first one, yes sir. But is this good or is this bad? If you are going to understand this lesson, those are one of the best lessons. Losing on the first one, but our second entry with higher risk. Then see, higher risk or lower risk? See everybody how we tend to think? We are programmed to think that this is bad, right? Julio is crying, oh, I'm losing. Dance is crying or Dance is complaining, you know, second entry to its high risk. Is it really high risk or it's less risk, everybody? I have another golden nugget for you. Golden nugget number 1, pen and paper. Professional traders manage the risk first and they don't chase the money. Second entry with 0.4. Wrong answer. Wrong answer, everybody. Make sense? So we are still here. Less risk, exactly, everybody. Golden nugget number 2. And this is one of the most difficult emotional scares for, not for you, believe me, not for you, for the students and traders in the advanced course. This is one of the big ones. Trading not to lose has nothing to do compared to what? Trading not to lose money has nothing to do in comparison to trading in order to make money. Take a pen and paper and let's write this down. If you are going to trade not to lose, then you are going to enter in here and the market is going to go against you and you are going to feel sad. And now when it's the next time to enter, you are going to not enter and you are going to stay out. Makes sense? It's all good. But this is the big one. Most of the advanced or intermediate traders are not trading to win, are not playing this game to win. They are playing this game, for the lack of a better word, they are trading for not to lose money. This is all the same, boss. This is absolutely not the same. If you are scared in here and you're thinking, oh, I'm going to have a greater risk, then your brain didn't learn the skill yet. You are trading not to make money, but you are trading in order for not to lose. Make sense? The big difference between a professional trader and advanced intermediate is that professional traders, we know where is the time to put more force on the, what's the word in English? Not the brake, but the accelerator. You are driving a car, everybody, and here you go 60 miles per hour or whatever. Okay, now it's time to go 70 miles per hour, and most of you, which is okay, beginner traders, you get scared when something like this happens. But if you can understand that you are risking 1%, you know, it doesn't really matter here or here or here or here. You say, this is the pattern that I'm trading. It doesn't really matter. You could be trading uptrends, up market wave. You could be trading head and shoulders, you know, whatever, crumbs. You could be trading pennants, whatever. It's all the same. You are going to say, well, you know, I'm going to risk 1% if the market is going to stop me out on the pattern. So up market wave or uptrend, the market is going to reverse. So it's not going to be in an uptrend or up market wave anymore. It's going to reverse into a down market wave or downtrend. Head and shoulders is going to reverse into inverse head and shoulders. And this pennant is going to reverse to something else, meaning the pattern is not valid anymore. You are going to lose 1%. And here is the same. Make sense, everybody? This is an advanced lesson for you today. This is an upgrade. Before you were risking, you entered anywhere in here, or most likely you did not enter because risk-reward ratio was stopping you. Now we are going to split this entire risk into 5 parts. Just an example. And when the market goes against you, you should be happy. And you really want the market to go against you. This is the bad news, the best news today. You want the market to go further down and against you until down. You want this. Now Dancy is going to explain why. Because every single time if the market stops you out, everybody, you are still going to lose the $100. Make sense? Everybody type in the chat, I understand this. Oh no, I don't understand this. If the market is going to go down and down and down, and you are going to buy, if the market stops you out on the pattern, you are going to still lose the initial risk. But then why should I be happy? Because of this. Now listen again. Pay attention. If the market goes down to 61.8, how is your risk reward in here? And if the market goes down more, how is this reward in here from the previous one? Do you have a better risk reward, or do you have a worse risk reward? I hope everybody, I hope you understand this, but only your trading is going to show, not to me, to you, if you understand this. Every single time the market goes against us, we have, let's use a simple English. Question for you, if the more the market goes against me on the Fibonacci pattern, are we going to make more money or less money? What is the answer? The answer, don't you understand, guys and girls? Don't you understand, traders? The more the market goes against us, the better risk-reward ratio. So, oh my gosh, this is totally the opposite that I've been thinking so far. Exactly. We've been used to think that when I enter the market must go my way, right? So, everybody, don't be so mean to yourself. This is an emotional skill, make sense? This is an emotional skill. We've been used to think that, oh, I'm going to enter in here and the market goes my way, that, you know, I'm the man, you know, I'm the trader, I'm the professional one. And we've been used to think that if the market goes against us, that this is bad. And it's not true. Not true if you understand how risk works. Every single time, everybody, on the Fibonacci, this is good news. You say, you have two friends, right? They are both in here. The market goes against one trader and he is sad, or she is sad, oh my gosh, again. And the other one is, yoo-hoo. And the other one it's saying to the other one, you know, what's wrong with you? This is bad. You know, and it's not. Do you understand, everybody? You want the market to go against you. Isn't this great information? And this is not philosophy at all, everybody. Check the numbers. This is pure math. The more the market goes against us, of course, then blue goes to blue, right? We need to lower the risk, I mean the profit too, right? But when you count, when you end the calculations, the more, this is the bottom line for today, the more the market goes against us, the more money we are going to make. Sir, saying I should be re-enter when the market goes against me. Yes, but only when you have 1, 2, 3. Not just blindly, everybody. Make sense? Not just blindly. Okay? You have advanced traders that are going to find the Fibonacci and they're going to just put buy limit, buy limit, buy limit. This is the Fibonacci. Buy limit and stop loss below DA and the take profit above. But this is for the advanced traders. You are still learning how this market works. So every single time that the market goes, and the answer is yes. Make sense? And don't let any other teacher on YouTube telling you the otherwise. Make sense? Because you have people teaching you that if the market goes against you, stay out, or this is wrong. You teach them, dear teacher, I split my risk in 5 parts and my stop loss goes down here. This is an advanced technique. Fair enough, everybody? No, this is not, see, now this is another challenge. This is not counter trend trading. You have a Fibonacci going up, everybody, and every single time you just split the risk in 5 parts. And the market goes against you and you buy again. But you must follow the rules. You are going to burn your account. Listen to me. You are going to burn your account if you are going to get greedy and you are going to enter 1% in here and 1% in here and 1% in here and in here and in here. If the market stops you out, you are going to draw down. Don't do stupid things. Follow what we are teaching you. Does this make sense? Are we clear, everybody? Oh my gosh, I'm going to put 5% and 5% and I need just one Fibonacci and I'm going to make 50% on the account. This would be stupid. Oh, you are so mean and rude. I don't care. This is a stupid way to trade. We are telling you, professional traders, professional money managers, they risk 0.5% on the pattern. Oh, just 0.5%? Yes. Professional money managers who are managing pension funds, multi-million-dollar accounts, okay, they risk 0.5% on the pattern. So, if they are doing this, right, who are we then to put? Make sense, everybody? Is this clear? Don't do stupid things with money. Oh, but the math is the math. You are not a robot, my friend. If you put 5% in here and 5% in here and the market goes against you, you are going to get emotional and you are going to get scared. Okay? Never forget, this is not trading or investment advice. We are here to learn. Okay? I've seen stupid... No, it's true. Make sense? I've seen stupid people doing stupid things with money. Okay? And the best part for you who are on this stream, I was one of them. I did this 20 years ago. I learned this technique, I got greedy, and I put 5%, 5%, 5%. And then, game over. Game over. Oh, but you just follow the rules, boss. Yes, you too, right? We just follow the rules. Right? How many times could you explain Fibo levels to manage risk? Yes, it's similar, everybody. So you are going to just enter, okay, so this is math, it's just 0.2 and the Fibo levels is the same, but you are going to split the risk on the Fibo levels. So what does this mean? This means that stop loss still below the A, but you are going to re-enter at the Fibonacci levels. Okay? So the first one, it doesn't really matter when you enter the first one. If the market goes against you, you would re-enter here, and then you would re-enter here, and you would re-enter here, and you would re-enter here, and lastly you would re-enter here. And the more the market goes against you, the more money we are going to make. Just look at the graph, look at the rectangle. Oh, I got this because you have the more the market goes against us, the less risk. Yes, the less risk in pips, right? So now blue goes to blue, and then you need to rearrange those one, right? Blue goes to blue if this happens. Blue goes to blue. Okay, everybody, not just dances. So the mathematical way is just, you know, you split into 5 parts, you split into the four parts, whatever. Just an example. Here on the Fibonacci levels, you split the risk in 1, 2, 3, 4, 5. This is the same. No, it's not the same. The mathematical approach and the Fibonacci levels approach, you are going to enter at different levels. Okay? So if this is 100, talking about the mathematical approach, if this is 100, background color, then you are just going to divide this rectangle by 5. 1, 2, 3, 4, 5, a little bit higher, right? Out, 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 out. Clone. 1, 2, clone. 1, 2. See, you are going to enter with the mathematical approach. You are going to enter differently. Oh, but it's similar. Yes, fair enough. It's similar, right? It's similar, right? It's similar, but it's still different. Oh, and I made a mistake, right? This is the 100%. Now it's not similar anymore, everybody. It's going to be quite different. So this is the 100. 1. Those are your re-ends. 1, 2, too big. Something like this. Let's try one more time, everybody. 1, 2. 3. And clone. 4. Okay, you are going to enter differently with the mathematical approach, your price action, the levels, right? So with the mathematical approach, you would enter, just an example, 0.42395, 0.40912, right? It's going to be quite different. Now this is the Fibonacci level in here, just an example. The blue one is the Fibonacci level. Okay? Boss, what is better? There is no right or wrong, everybody. Whatever works for you. Okay? Me personally, I am with the Fibonacci levels. Okay? Now, this is AUDCHF, everybody, daily chart. And you have FTMO, and you have the 5%ers, and you have top step trader, and you have what are the names of the prop firms? FTMO, 5%ers, top step, what else? I don't remember anything. What would be another one? Blue FX, right? And so on and so on and so on. Tell your friends and family. So everybody, this is how this profession works risk-wise. And now you learn the skill, hopefully you learn the skill, right? And you are trying to enter in here, and you are trying to enter in here, just an example, and you are trying to enter in here, and you are trying to enter in here, okay? And you know that 1 plus 1 is 2, you know that this is the truth. This is pure math, everybody. This is not, oh, you know, FXFreedom is so intelligent. This is pure math, everybody. You know that this is true, but then those guys are telling you, well, you cannot hold the position overnight. Clara, MFF, thank you very much. And some of them is going to tell you, well, you need to close your trade on Friday. And some of those guys are going to tell you, most of those guys are going to tell you, you have a 30-day challenge. Tell me, everybody, and believe me, you are in the best place right now, and you can show this recording to anyone. I challenge anyone to come here and tell me otherwise. Fair enough? If those guys that are giving you the millions and the billions just make 10% in 30 days, just make 5% in whatever, but you cannot have your position open overnight, or for God's sakes during the weekend, tell me, can you make money? It's a yes and or no question. No, somebody, oh, scammer. No, let's clear one thing out. Those guys are honest, okay? Most of them, I don't know, I didn't check. Let's suppose that those proprietary trading firms are honest, okay? But their money, their revenue, and you can ask them, their money comes not from, the majority of their money doesn't come from the professional trader making money, but it comes from losing clients. Make sense? One more time. They are honest. They are giving you a chance. Yes, they do. I know some of them, they're honest and they're giving you a chance. But I also talk to them, some of them, and I'm telling them, guys, you know, if you are for real, if you really want to help traders, and then we got into the conversation about during the weekend gaps and other bullshits, you know. Here is the question. If I have 30 days challenge and I pay live money and the market is sideways or in consolidation or simply does not move, can you make money? Can we make money? Exactly, not on the daily chart. Tell your friends and family to watch this lesson and to stop. Make sense? Who makes money in here and comes to the accounts are the skilled day traders. Make sense? The short-term traders, the skilled, on the 15-minute chart, 30-minute chart, right? Otherwise, it's game over for us. You have zero chance of making money. This works, it's pure math. And good news for you, if you want to, everybody, we have a partner from Australia who doesn't have rules. You can trade for free. Make sense? You have no rules to be open overnight on during the weekend. Make sense, everybody? You still need to manage your risk, but we have a partner. When the time comes and you say, okay, I'm ready, I want to manage third-party money, I need a bigger account, I need money to trade, don't go with those ones. unless, fair enough, don't get angry with me, fair enough, unless you are a skilled day trader, this is a losing game for you. Just look at the chart. Make sense, everybody? And you can ask them, because I ask them, not all of them, a few of them, you know, I get into a fight with some of them online, in private, you know, no, you know, we support real traders. Well, can I see you're a company, right? FTMO 5% or Stop Step Blue, you're a company, right? Yes. Show me a statement that I can see that you are making more money from the profitable traders that you are helping and not from the losing accounts. Nobody replied to me. Why not? Everybody, I'm not judging them, makes sense? It's a business, right? Fair enough, it's a business. But just start to think and open your mind and open your eyes and tell your friends and family, you know John and you know Jane, that it's with FTMO 5%, whatever might be the case. I'm not against them, makes sense? They're all the same to me. When I see 30-day challenge, you know, it's impossible from the daily, monthly, weekly. And they're going to tell you, well, you just get more skill than we are going to give you. Doesn't change anything. Most of the revenue, those guys and the other proprietary trading firms, come from losing accounts. This is the bottom line. Okay, everybody, and first thing first, don't forget, Saturday, August 27, 2022, if you want how to build a strategy that works, is going to cost you 53 bucks. It's called the Fast Track Series. Okay? No, not mandatory. This is, some of you are saying, oh, I don't want to spend a year or more. Well, this is for you. Some of you are sending emails, I don't have enough money to come to mentorship, okay? Then this is for you, everybody. You know, 53 bucks. And we are telling you 3 weeks, now this only 2 weeks before, so you can start save your money. Okay? Number one, speed up your learning of the Forex market and what works. Number two, meet other professional traders. Number three, I'm going to give you my system for free, but I'm telling you it's nothing special, and free if you are already in private courses of the 202. Time needs to be decided. Okay, this week I'm going to tell you what is going to be the time. And the next one, everybody, is this one. Okay, so number one, how can we help you? Number one, next level number one, if you want quicker results and not waste 2, 3, 4 years to figure out the market, ask for private lessons of the Forex Course 101. Time is an issue, why would you waste it? If you want, once you are over the Forex Course 101, you go to the next level, it's number 2, it's called the Institutional Trader Development Program. It's also called the Forex Course 202. Okay, if you've been around the block for 2-3 years or more and you are not making it, this course is a must. You must come to this course. Why? Because you are not stupid. Make sense? Today it was just one lesson. We are not stupid, but yeah, we are lacking some specific knowledge. If you want to learn the tools that the big investment banks and big hedge funds are using, and no, it's not mitigation and order blocks, we are using the tools, is something different. You must come to this course, okay? And lastly, it's the business part, number 3. If you want to trade for our prop desk, as for incubation, we have different programs where you can start as a junior trader and make a career with us. Our firms are in the USA, Europe and Australia based. No 30 days BS testing, fully transparent. Okay, everybody? Clara, interested, send me an email. Julius, please, Clara, can get together on Zoom. Which time it will be? I'm going to figure out this week, everybody, okay? See you back tomorrow. Until tomorrow, download this lesson.